traders, day 3 and day 4 of the challenge. This trade was a battle between weak retail earnings and surprisingly strong housing data. I shorted the USDJPY. It's not a surprise, I've been shorting the USDJPY the entire challenge. And this was after I saw cracks in the consumer stocks such as Target, Walmart, and Costco. All missing guidance were a warning on slow spending. And on day 3, the trade hovered near my break even, as you saw in my last video because I was too lazy to edit that video. But on day 4, I ignored the existing home sales in reports, and the bullish price of the USD was tragic. So let's break it down. This week theme is the Fed, basically Jerome Powell. The July FOMC minutes confirmed policy is still restrictive due to inflation easing, but officials want to stay cautious. Markets are betting that 85% are on the rate cut side on September, but Powell hasn't confirmed it yet. So the tension makes every data release explosive. And also with Jackson Hole around the corner, every report matters.
It doesn't matter how it makes you feel.
Besides that, retail earnings told a scary story. Target, Walmart, and Costco were all disappointing. There were weak sales, cautious guidance, and margin pressure signaling a slowdown in the U.S. consumers. So my bias is that the U.S. consumer is cracking and the Fed will need to cut. So it's a bearish USD. So with retail weakness on my mind, I shorted the USDJPY around 148.2. Price pushed against me, then drifted back towards my entry. By mid-session, I was near break-even, but no momentum followed, so the AF flagged a mixed signal. Earning weakness pointed to a soft consumer, but sticky yields kept the USD supported. I decided to hold overnight, expecting a follow through the downside. And the next day, it was almost like a trap. Day 4 was a trap for me. At 8 a.m., existing home sales beat expectations. So it beat the forecast. The strong housing data flipped the sentiment bullish on USD, and my short, based on my weak retail earnings, got steamrolled by the resilient housing. So instead of cutting before the release, I held. It was my bad, honestly, and the dollar spiked and my stop was hit. So the lesson here is different consumer signals can conflict. Retail earnings show weakness, but housing proves strength, and the market sided with the stronger numbers. So yeah. And here's the kicker. The FOMC minutes lead dovish, but acknowledging restrictive policy and growth risks. But as long as data like housing show resilience, the Fed has to cover daily cuts. The tension between weak earnings and solid housing is exactly what punished my short bias. So that's day 3 and 4 wrapped. The market reminded me that retail earnings is not the entire consumer picture. Housing beat the forecast, USD railed, and my short failed. So you know guys, you know that I like to be transparent with you. So I will show you my dashboard here in FundingPips. And as you can see, my win rate is around 50%, I think. It should be around 50% because I taken 4 trades, 2 wins, 2 losses. The only issue is that I took too much of a risk. I should have cut a bit that trade, so it was a minus 1.5%. I gave back that 0.7% or 0.8% I had. So right now I'm almost on minus 1%. I'm right now minus 0.7%. just by showing the USDJPY. Here are all the metrics, here are all the trades I've taken. All the entries are right here, my open and my closing trades, as well as the time and the date, so you know that it's real. I will refresh it for you one more time, just so you know that it's completely clear. So today was a really bad trade. I hope that maybe tomorrow with the Fed or with Jerome Powell, we can get this to break even, get my account to break even again. So yeah, without further ado, see you on the next time. So that's a wrap for day 3 and day 4. It was sad. The market punished us. It reminds us that retail earnings does not equal the entire consumer picture. And housing beat the forecast, so USD railed and my short failed. I should have caught the trade earlier with the data released. So on day 5, we face one of the most important days for the Fed. We will talk about the core PCE, and this release could reshape the entire challenge. So subscribe and stay tuned. This story is just heating up.